Good morning. Okay. So this freight train going up doesn't want to stop. And we're up again here. Looked like the momentum definitely stopped yesterday, which we could see the yesterday's tail. We're looking at the S&P futures there. With the close was below its open, and it ended the day pretty much where it started the day after going back and forth. So even though it's up above yesterday's high, I'm eyeballing this, I guess, just slightly. It's within that area. So for the moment, it looks like just a consolidation, chopping around here. Kind of consolidating those gains over the last few days. Now the question becomes: is this thing for those? Other than those that can trade intraday and maybe handle making decisions that could happen relatively fast. It absolutely is not something to consider as a swing trade. To jump on board here, you can straight up run. And then even yesterday's gap up, and was able to hold on to the gain without coming back in. So clearly buyers are jumping all over themselves to get on board here. Things moving pretty fast. It's kind of, in a sense, the reverse of what the norm is, meaning you see how prices kind of churn their way higher and then fell relatively fast on the way down. And of course, declines tend to happen faster than advances. But it's not the case on this particular turn, which makes sense in the fact that this is really a news-driven market. Concerns that the economy is slowing, trade wars, China, Mexico, so on and so forth. And then, Mexico's not a concern, and the Fed's going to lower interest rates, and market rips back up again. And who knows, what happens with China in the next 20, as far as another tweet coming out. So definitely a market environment where you better be paying attention. As always, you better have a stop loss in, and you better have a plan on how to handle things that could change quickly. That's just being smart. And so, enough of that said, Q's coming up toward resistance. By the way, the S&Ps, they really don't have much resistance here. I mean, there's some overlapping days over here, but there's very little to stop this from going up now that it's cleared this area. So that doesn't mean it has to go straight up. But, comparing to Q's, which we can see an obvious swing high right there, which is in the way and a reference point to sell into, especially after, multiple days moving higher. And we got a big whole number there, 7,600. It just makes sense that, this is not the place to be committing and thinking that there's going to be a significant move to the upside from this point without some type of a reaction to this high. That's why we look to buy pullbacks or breakouts versus, chasing the train that doesn't seem to want to stop at this point. So, and when it happens, it happens. We say it is what it is, but, being disciplined and following the plan as to what normal patterns do will provide consistency versus just jumping on board something as an impulse, thinking, oh, this is so strong, it's just going to keep going. So here's our reference point, and it's an area. So we just look at this and say, all right, 7,600 is something to focus on. And then there's this swing high up there, pivot high, that is marked PH. And that's an obvious place where sellers are going to have offers out into as prices reach there. The Dow, similar to the S&Ps, with little to stop it, but it's just retracing up into yesterday's topping tail. So we'll see. I'm just going to flip this over to like a 240-minute chart just to look over to the left, kind of make it clear as to what's over there. And what I'm saying is there's really little to stop it from going up. So when we look to the left, we say, well, is there a swing high? Is there a base? Is there a whole bunch of, choppy price action or whatever it might be, that can stop prices from going up. And when we say stop, it's really just saying, well, there's a reference point up there technically that others will look at. And, kind of small. And it seems to me that, this larger area up here, the double top where prices fell from, is more of the focal point. But we'll see. Right now, the Dow is retesting the area of this topping tail. So this is something we'll keep an eye on when the market opens to see if this can push up above that area. It's in an uptrend. So, and it did retest here. It didn't keep making a lower. It didn't make a lower low. It came right back up. But it's the third time up in this area. 1, 2, 3. We'll see now if it can get through or whether that's going to come in. So keep an eye on that. Bonds are down, not very much. Helpful for the markets here. Holding a little support level there. But, just consolidating the gain here. So bonds are still in a bullish trend and just consolidating the gain that they had over the last several weeks. They are into some resistance. Squish that up as you can see. And that's what I'm talking about. Is there a congestion area? You can see pivot high, pivot high, pivot high, which means there were multiple attempts to try and push up here. And buyers at that time couldn't get it through there. So it just becomes an obvious reference point where sellers are going to show up. And they have. So now, can the new buyers, right? Can these new buyers or the buyers from there, which got out, maybe they got back in, do they want to keep committing over here to absorb the supply from the old buyers back there and then be able to push higher? So right now, it's just a wait and see. If bonds can hold here, you should have an alarm up above this area to see if they break out. If they do, that means yields are coming down and equities don't like that. You can see the advance in bonds here is inverse from the move in equities over the month of May. So you want to keep an eye, set an alert. If you don't have bond futures, just use TLT and see if it's breaking out above its most recent highs. And oil struggling, after this pretty sharp move, down to that support area, pivot low, pivot low. That's how you find support and resistance and turning points. And just look over to the left, see where there's some pivot lows or some congestion. And that'll be your reference point. Well, they don't always hold. You can see right here, right on that one. Once that didn't hold, right, and those buyers recognize that, you can see the bottoming tail bar. And that bottoming tail bar right there, when it didn't move higher, they said, oh, it's not going, get the hell out of the way. And then it fell straight down, slamming through that one and came down to the next one. Howard's asking, do you use overnight data on futures to find reference point? Yep. So all the futures contracts that we're looking at shows you the overnight data. So trade, now this was part of our conversation yesterday in the room, was that, for me personally, when I'm looking at, the ES or the NQ, and which I'm looking at the overnight data, I'm also looking at the spiders. I have this on a 24-hour chart right now, but I also would be looking at these spiders with a day chart. I just changed it to auto, to be aware of gaps and how that traded, and not on a 250-minute chart intraday. I'll be looking at that on a 5-minute chart. And historically, what I find is that when the futures are, from their 24-hour chart, are in agreement with what's happening on the day chart, things tend to move with ease versus potentially being more erratic. So something we can talk about in the room. But for example, you could have the futures in a 5-minute downtrend and this be in an uptrend because of the overnight data. And when you have that conflict, things tend to be a bit more choppy when that happens. When they come into alignment, things tend to trend. It's like anything else. But futures and the day chart, it's related to you looking at the same time frame. So we could talk about more of that as we trade more of these futures contracts, which we're going to be doing in the future. So spiders pushing up, same story there, coming up against that topping tail. And we'll see if buyers want to keep pushing it here. So far, they're holding it. Constructive pattern there. But we'll see if it does it double top. We'll be finding out here quite shortly once the market opens. Oil, we talked about. Gold, pulling back to support. Right? This minor support area, we'll see if that wants to hold. It's chopping around here. A little bounce here, pre-market. But up against that resistance, you can see, and support, resistance, just look to the left to see what's there. And I say that to kind of get you to stop. Everybody, those of you on YouTube in the room, get away from, the Fibonacci levels and the trend lines and all the esoteric stuff. Buyers and sellers react to where money changed hands in the past, not lines that move around as you change time frames or where you connect the dots to and all of that. That is, what you're inundated with through the media and other websites. And historically, that's the way it's been, where, through indicators and lines and so on and so forth that bring up proprietary reference points. You don't have to trade with that type of complexity and confusion. And you can see every day what we do here. And it's just, you just look at where prices were before, they retest those areas, they react to them, so on and so forth. Simple works. And anything else I want to look at here before we move on? There's that technology. We got good bounces on many things. And so, we'll see what today brings. The more things go up without a rest, the greater the potential to pull in relatively hard. So we'll see where things go today. Just because they're up here pre-market doesn't mean they're going to stay there for very long. And if they stay there, well, so be it. Maybe they just keep running up and the short covering continues and the buying frenzy continues, and we'll see what happens when they get to the high. But that's what our job is, see what happens day to day, put it in the context of multiple time frames and trade them accordingly with our own personal plan. So all yours, Dan.
All right, thanks. Good morning. So we actually, in the swing ladder, we have 12 open positions, and we only have 3 in the weekly options trader, with this one being the only problem child, the spiders. Now, we always do trade review, and we had a perfect entry right here yesterday on the 15-minute chart. It was in a downtrend on the 15, it was toppy. It was a deep retracement. We did a sell setup, reversal bar, boom. So the entry was perfect. But in terms of trade review, Greg and I were talking that the only thing we can do when we're fighting a strong trend is wait for the hourly to fail to make a higher low. So this thing is still a tank on the hourly. So our stop was over 291. So let's just give it a 5-minute high for now. We have Lima Kilo put spread for Friday. And finally, we have a Netflix call spread. We already covered half at a nice profit into weakness yesterday. And we still got a nice profit on the back half because we entered half here and half, on a sell setup. So we're fine on that. I've tightened the stop. Now let's look at the swing trader. And we have every single one of these are bullish. We have 12 bullish positions open. So we still have inventory. It's just I've been much more cautious on adding new ones, and that's going to be the same case today for obvious, for the reasons Greg just went over. We bought this thing yesterday. We're long stock. Well, I correct myself. This is a short actually. SYF. We shorted the stock. A sell setup. Cron. We had a beautiful entry yesterday. Long stock. EXR. Long stock. Intel, a put spread, AMD, covered call, and we're short the 32 and a halves. That's why if I were just long the stock, I would have been out half or all yesterday. But since we have an in the money covered call, we're still making the time premium, so I'm okay with that. DHR, we're long stock and in trail mode. GWR. We got a covered call, SPWR, long stock, and finally Golf Hotel, covered call. All right, so we're in good shape with all that. Let's look at gappers. Krieg gapping down 56.70, a bearish gap, but now it's kind of range bound. CBay, it's getting its clock cleaned. $6. Look at that. That's a nasty gap. JetBlue, 19 and change. That's a bullish gap, but now it's far from the 20. Victor Golf was actually a bullish setup. So these shareholders are not having a good day. Well, 1175. It's not that horrible, but there's no trade for us. Love. There's no love for love today, $34. That's a very bearish gap with a price void. Let's put that in a window. Look at this S-Fly. And I saw on the news they did get their buyout. So what this move is telling me, McGraw, I don't know if you're listening, with 99% accuracy, this move is telling me that whatever buyout amount the market expected, they didn't get it. When they finally got news of what the real number was going to come to fruition, they had to lower the valuation for that number. And the fact that it's flat right now confirms that. HRB. Very whippy pre-market. I got no interest in that. HDS 39.70, very bearish gap. We'll see if we can get a bounce to short into. CHS 332. That's an ugly downtrend, but I don't want to play with a $3 stock. 1670. It's a big gap down. KC, big gap up. Look at that, it's gapping over my monthly. Look at that, that's the all-time highs. Wow. I always like looking at charts like this and say, okay, where could I have got on board intelligently? And I would say right here, right on this breakout bar, right there at the month of April 2010. Wow, what a ride. But nothing to do with it now. Papa Mike is on my short watch list under the lows. And it's gapping up, which is fine. Because then if it triggers, then it's fine. TRV is a 1, 2, 3. So if the market's going to stay strong, this could be a go-to on the long side. The sector's been strong. Mohawk, we still got to find an entry because if we did this core, your stop is last week's low. So that's $14 stop. And wow, that's pretty much all I got here. X was on my list yesterday, and now it's up. Let's keep an eye on that for a put spread. I like these sideways consolidations after a nice move with a further price void to the left. Yeah, trader, it looks good. So X, let's put that on our list, McGraw, for a put spread. These are some leftover ones. This one's a put spread, McGraw, but didn't we look yesterday on this one? Coming out of a rounding bottom. It is lagging, but you know. And what was the problem? Was it spready or not enough juice? Same here, Qualcomm put spread candidate. NVIDIA, this was one I had in the weekend letter to sell a put spread, but the gap up messed us up. IIPR, this marijuana real estate ETF is a put spread watch. Oh, our Beyonds. Look at this nasty gap down. So that's on my list to, remember I told you, I would just need a pattern and I'll be shorting a call spread. And maybe today is the day. Intel, we already talked about. Lyft. We stopped out of that yesterday. Michael Jackson, it's sloppy. Tesla, nice gap up. I think I mentioned yesterday that was a put spread candidate. Facebook, no pattern. Google, maybe day trade, but Netflix we're in. Apple, there's no pattern on these things. You know, even for a day trade, I wouldn't touch that. Gapping up to yesterday's highs, flopping around, up 6 days in a row. So I will not be aggressive here at the open. McGraw, your KMX is a tier 1, I like that. If we go long, that's what kept me out of it yesterday. But that's a pretty setup right there. Let's see, I had Vico. Here's a put spread, McGraw. Look at that beautiful 15-minute chart. Here, I'm kicking out, well, I got Beyond on my other screen. Vico Soare, that's a put spread candidate. Look, it's been tested 3 times. 1, 2, 3. And now it's closing breakout. But this is a beautiful day trade. Look at the 15-minute charts. As long as it opens flat and the market wants to keep going up, this is a tier 1 day trade setup. Let's see, I had ABR as a short watch. Wow, EQIX, nice. I hope that gap's real. There's not much volume, but yeah, that I remember you all talking about it. I liked that yesterday. TWOU did not trigger as a short, but if it does trigger under Friday's low, it's still a go. SKT did not trigger, but this is a short under the lows. LPLA. Nah, I don't like the topping tail. Beyond is cracking here, the lows pre-market. Look at that. Yeah, so let's, the out of the money calls were very expensive, not expensive, spready. And that's, I'm sure that's going to be the case here at the open. Remember this IPO, RV, LV. That has to settle down. QGen is still, oh, it's gapping over the entry now. The entry was Friday's high. Vico 12. Yeah, no, that's crazy spreads. But look, if the market holds, that is a beautiful 5-minute high day trade. And market's holding so far. All right, so our diamonds that are against us, to close them now is $1.50. We sold them for $1, so we would lose 50 cents as of now, which is not, it's, you know, it's a loss, but it's not catastrophic. Wow, look at that run off the low.